Hey, welcome to Brisbane Small Business. I'm the show. I'm Kevin Gammy. Today I've got with me Morgan Elliot from Starling Finance Advisory, or Advi is who we are. Morgan, tell us a little bit more about you and the company, and so that we can find out some more.
Thanks, Kevin. Thanks for inviting us along today. The Starling Finance Advisory literally started about 3.5 years ago. I was working for a very large lending organisation. Loved the place, but felt it was time for me to move on and branch into my own business and run my own thing, providing solutions to small business around the finance piece. What I found a lot in my experience was clients were crying out for an advocate or a lender advocate who spoke the same language as the lender and the same language as the client, to really give them some assistance rather than being a transactional based business. We look at giving our clients support and advice to help them get an outcome, get a result, and a solution.
Fantastic. So it's really awesome. And if we get too much feedback, I'll get you to mute your side when we're doing this, but you don't have to adjust yet. But I do imagine it's really comforting for business owners when they come to you, because they don't speak banking, okay? No. And banking tend to not speak too much small business either, okay? So having someone who can translate small business into banking and banking back into small business in between could be really, really helpful. But let's go into a bit of a background about how we even got here as a world, okay? So, we had the Banking Royal Commission, and basically, so many horror stories coming out of that, and yet bank stocks rise. So whether the advice coming out of that was really the advice that was needed, I'm not sure, but we won't go into judgment calls on that. The banks then got a little bit grumpy with the world and decided that they weren't going to, they were going to make it really tough for people to get credit, because the government had slapped them around saying you should be, more responsible for the money that you are lending. And then they went way too far on that side. That's my judgment call. And just as I was starting to loosen the reins on that, we get hit with bloody COVID. Would you say that's a fair representation of how we've got here?
It's been a rough ride for the last year and a half. You throw in the bushfire disaster, and then you've got a perfect storm. And from a finance perspective, credit is not a perfect science. It's one of those things. I've sat on the other side of the desk where you're looking at the credit decisioning, thinking, okay, this is where the lenders are looking at it, saying, where can we lose money here? And they're applying the rationale around that and trying to deliver a process where it's going to fit a business model, and it's not a one size fits all, unfortunately. When that's where I think it falls down. Applying a one size fits all to every business does not work. You've got to examine and assess the business.
And that's kind of where I'm talking about the banks not talking small business and the business not talking bank, because they've got their model, but what we have, when we don't even know exactly what they're looking for in the model, that can become really confusing. So basically and there's two stages to this, and you and I have talked about this a little bit, but there really is the funding for getting through the challenge that we have immediately before us right now, and then there's funding for working capital as we're on that growth path straight afterwards. So there's two sides to this, and there's and as you're saying, there's different solutions for different problems, and those two are two different problems.
Correct. I mean, I call it COVID debt, and it's going to be, I think it's going to be COVID debt for a while. The government's done a very good job at reacting with stimulus and support for small business. I think they've created an ability to access cash. Unfortunately, delivery of that cash via some of the institutions that are doing it is a bit slow to react. And I know the PM has come out and given them a bit of a touch up on making sure they can move a bit faster, or pushing them to move a bit faster. And certainly my discussions internally with some of the banks is that they are getting hammered on lack of engagement.
Well, and you actually gave me a bit of a horror story even beforehand that, you were talking to one of the major institutions. We won't name that institution, but, that had something like you said, 23,000 applications. Of those that they've processed, only about 30% are actually getting support, and they're looking for security, even though the government's given them access to all this extra cash and said, stop looking for security, we'll give you 50%.
Yeah, look, they're still following the rationale of their existing credit matrix, and that's where I think this is probably the challenge with policy on the fly, where you've got to react and move quite rapidly, and every lender is trying to build their credit policy around what's available to them, and they're not changing too much. A lot of the clients that are coming to them are looking for a magic pudding as well. Some of those businesses might have been heavily distressed or challenged before COVID-19 hit, in which case they're still unlikely to get funding unless they've got ample security to drive it forward. And I mean, the example you and I discussed earlier, that particular client was probably a good case of the lender being under the pump, not really listening to the client about what they needed. And we drove the solution where we sort of said, look, there's extra there if you look at it, and suddenly the light bulb went off and went, well, we can actually do that. But it took us a month and a half to get there.
Now you've actually got a slideshow to share. Can you share your slideshow for me? And you're about to lose shopping, I know that. So what we'll do is we'll actually show the slideshow as well, so they can't see how confused you look when you can't see you. So
yeah, thanks.
Hey, we all get like that. All of a sudden our screen goes blank and we go, can they see me? Can they see me? Okay, make sure you don't do anything wrong here. Okay, awesome. So we'll add that into the stream, and what we're going to do is we'll even take everyone out so people can see that. I'll even take the branding off there as we're going. Great. So Morgan, it's over to you. Talk us through the finance health check and Are You Finance Ready? The different points that are really important to cover. So over to you.
Look, I mean, I'll keep this fairly ad hoc, Kevin, and jump in with questions as we go, please, because I think it's important that the listeners actually get to grips with what's really out there. And I've listed some key points, but there is more to it than that.
Trust me, I'm good at asking dumb questions.
I've worked that out pretty quickly. A lot of my clients, we're sort of when this first kicked off and started, there was a lot of paralysis. In the community, in the business community particularly, because everyone's saying, what do we do? How much cash do we hold? Where do we go? And a lot of it's common sense, but across like this, people default to panic in some cases. How do we pivot? How do we change our business model? Do we need to change our business model? What I say to my clients is plan. Make sure the contingencies and continuity planning and forecasting is the backbone of getting through a crisis like this. Are their financials up to date? Do they run management accounts regularly? What's their supply chain looking like? Are their customers paying them quickly? One of the biggest impacts or changes we've seen over the last month and a half is where the slowdown in the supply chain, where everyone wants to all hold cash at the same time. So they're not paying their suppliers. Mm-hmm. That's in some instances, some industries, it's freezing the supply chain and causing a little bit of paralysis there. But as people have sort of come to grips with what's happening, they've relaxed that and thought, well, there is actually work happening. Business is progressing. Business is working. So that leads me to my next point: is communicate. Do it early. Do it often. Talking to your suppliers. Your suppliers are going to be probably your biggest supporters, because they're going to be in the same position as you. They need cash, you need cash. So work out a way to either pay them back on the drip, by a payment plan, defer the payments if they'll allow you to do that. Talk to your lenders, your finance advisors, your accountant, your employee, even talk to your competitors and your peers, because they're the ones. Everyone's going to have an opinion on this and how to best position yourself for the business, but it's all about managing cash flow. How do you ease?
And Morgan, I'm going to encourage people to start discussions on this in our community as well. Not negative ones, needs to be positive ones. How can I not complaining about stuff? And I want you to get really active in that and help people with different solutions that you've seen, because I imagine that you've seen a lot of different solutions to this age-old problem.
There's many out there, and this is the thing, Kevin. There's people are obviously defaulting to the big four, and that's they are trying to get involved. They are lending money. I have seen a lot of cash going out the door, sub $50,000. Getting access to that's not so hard. Anything over that is where it starts to get a bit hairy. But those solutions are. I'll go into those solutions later on in the slideshow. But what I sort of do fall back on is you've got to create cash flow or cash readiness. You've got a number of options there. You've got government-backed stimulus, which you should be all across by now. Your lender payment holidays and deferrals. The lenders are offering this. The biggest challenge, and I'm seeing this at the coalface right now. We've put requests for deferrals for asset finance for a number of my clients into the big four, say about a month ago, and we're still waiting for confirmation that it's been done. So that there is a slight, because they are getting slammed with so many requests for it, it's taking a lot longer. And in that interim, your repayments are still coming out of your account, which can cause some problems there. The knock-on effect to that, and I've seen it in some cases, it will potentially reflect as a default if it's showing as a non-confirmed deferral. They can fix that retrospectively, but it just causes problems in the interim. And back to, there are, like I said before, there are alternatives outside of the government stimulus packages and the deferrals. It's just a matter of having the right advocate there to know where to look.
Yeah, absolutely. So cool. Yeah. So, and as you were saying, there are, with the stimulus packages, there are some opportunities there, but it's just a real challenge that the banks aren't quite getting their head around the offer that the government's given them, and their policies at the moment may not be reflecting that, as you said. So cool. So
the other, I was going to say one. I will just jump in with one point on that previous slide. One word of caution I always throw into the mix, particularly with the government-backed stimulus and the underwritten stimulus the underwritten lending that the government and the banks are offering. It's still debt. It's still debt that has to be repaid. So making sure you're back to your plan can allow you to, once you come out of this, allow you to make sure you can meet those payments post.
This isn't a grant from the banks. Okay, you can't treat it like that. This will have to be repaid at some point in time. So you need to be asking for money that's going to help you build your business, not just asking for money to go and spend on your next overseas holiday, which you can't take anyway.
Correct. We can go to New South Wales at the moment, which is probably a good thing anyway.
Hey, don't be like that. So I'm still looking forward to State of Origin. So come on, so is your business finance ready? So what are the things that we need to do to get finance ready?
So, well, just jumping on, we're now moving from crisis phase to bounce phase. Coming out of the next 6 months, you're going to see an uplift. The economy is going to start to re-emerge. It'll restart. A lot of the small businesses that will restart straight away, your coffee shops, your gyms, people will start to flock back to those once they've actually got more access to, I suppose, the ability to meet with people, talk to people, engage. That will drive additional cash back into the economy. Businesses will want to take advantage of that. Cash is going to remain king during this time, but a bit, like I said before, plan. Does the business have enough to support the rebound growth? Keep on that line of communication with your with stakeholders. That business plan that underwrites your business and has done for the last 3-4 months leading out of this is going to be crucial to making sure your lenders are comfortable, your stakeholders are comfortable, your suppliers are comfortable to continue supplying you. All those pieces will come into play, and it then dovetails back to how much cash have you got. Take stock of the financial health of the business. And when I say finance health, it's looking at how much debt you've got. Is it good debt or bad debt? When I say good debt is your working capital. It's your stuff that allows you to.
Good debt is debt that's funding growth. Bad debt is just debt that is there because you didn't have enough cash and you're just paying that off. Yeah.
It's plugging a hole, and your COVID debt that's sitting there, that's going to be squarely between it. During the crisis, it's good debt. When it comes out of it, it's probably not the best debt in the world because it's still going to be repaid, and it may cause some restraints. In some cases, depending on the lender, they may take GSA security, which is in the old language a fixed and floating charge over the business. In some cases, not all cases, but in some cases, that may prevent the access to additional borrowings with other lenders if the client or the business needs it. So they may need to refinance that component of the debt before they can borrow more. So it's a snapshot of what does my debt look like, what's my leveraging look like, where can I get access to more cash?
Yeah, absolutely.
And it's a fairly straightforward way to approach it. There's probably a lot more. We can probably go into a lot more detail with it, but I think
But keeping it simple, Morgan. What I look at that as if I was trundled into hospital because I just had a heart attack, and the doctor said, "Hey, that's going to cost you $50,000," and I borrowed money for that. I'm not going to question. I'm not going to argue with him at that time about the cost of it. I'm going to find the money, and when it comes later on, hey, I needed that $50,000 to still be in existence later on. That was survival debt. That's what some of the COVID debt, how you should be looking at it. Is this the money needed to get the operation that kept us alive, right? So if you can think about it like that, that's a good way of thinking about it.
Yep, I agree. I think if you've got back to your planning phase, if you've got your repayment strategy on that debt needs to be fairly fluid, because your business will change as we re-emerge from this. Your business will change, its needs will change. You will need access to additional funds, and there will be restrictions on the amount you can borrow. It's just a matter of now looking at ways you can swing your business with access to cash or capital to keep the growth going.
Cool. So we've planned, we've communicated, you just went forward. I was just going to reiterate all of those. I can't more. We're taking stock exactly where we're at. We've stripped out the excess expenditure that we may have had, and we've looked at how we can defer our payments now. But that doesn't mean that's a permanent holiday. That means we're going to have to pay more back later on, because the interest that is being accumulated is being capitalized, and we're going to have to pay that down. So that's a really important point to remember there. Great. Next page.
I think in circumstances where I think just one extra point on that, I think, Kevin, refinancing what you've got may be the best option. It may not be the best option too, but I think looking at every available strategy that's there and engaging with the people who support your business, whether it's your accountant, your finance broker, anyone else who sits with you to say, here's what we need to do and how we build our business going forward. It's building that strategy to make it a robust approach, so you can actually take this head on and manage it.
Absolutely fantastic. So next step.
I've been asked a lot of this question, particularly in the last week and a half, is will business lending get harder? We've seen, and you raised it earlier, Kevin, around we had the Royal Commission. We've had, I won't name the bank, we had a blip with one of the lenders with the anti-money laundering compliance.
Oh, come on, we all know.
But I mean that's made most businesses hypersensitive as to compliance.
Yep.
This is a different beast. You've still got all those issues sitting there, and all that extra layers of compliance sitting there. But
Yep.
we've also now got the lenders are looking at the ways you interact with your clients, who your clients are, what industries you're exposed to, assessing whether they're comfortable with you being exposed to that particular industry.
Yep.
I've got a number of clients who operate in the space where they're dealing predominantly with government departments. They're as sound as houses. But I've also got a lot of clients, or one or two clients, dealing with the consumer market. One or two dealing. Say again?
And they're as safe as horses.
Houses.
Oh, no. The second part, the second group.
Oh, safe as horses, yeah. Sorry, yes.
It's so hard to get a good gig these days, let me tell you.
I'm sorry. My speaker isn't that loud, so I couldn't hear you say horses. I thought you said houses.
Yeah, so look, they will be looking at the riskiness of your client base, and particularly coming out of this, that's a really interesting point, and thanks for bringing that up, because all of a sudden we've had by the time we're through this, it could be 6 months, it could be 12 months where you've had a really crappy time, and when you go to get loan in 18 months, if they're looking at your last 2 years financials, and they understand on one hand, they can go, hey, yeah, that was a really crappy time for everyone. But on the other hand, they are a bank and they want to get their money back.
Yep. I mean, there will be an element of concession around that period, and every lender knows that. Every lender will look at that and give some concession around this period. But it'll also tie into how much material impact has this crisis had on your industry. So if you look at hospitality and tourism, they are going to be very difficult to acquire or secure funding for, depending on what piece of the supply chain they service. But it's still going to be a much tougher conversation. The greater level of detail that the client is going to need to put forward in terms of how can they borrow fund or raise cash, borrow funds, their business plan to service that debt and repay that debt will be probably a much higher level of detail than what it has done historically. What security might be available to potentially underwrite it? So houses, is there a house there that the client can use? Back to the heightened risk, are they going to be at risk in the future? We've seen one of the country's biggest airlines go pop this last week and a bit. This is obviously you're looking at the companies that supply into the airlines. They're being cash strapped because there's no business for them. There's no flights out there, and this is the food retail suppliers. They're having to move their business around to work out ways they can still make money.
Absolutely.
A lot of these businesses have
there are lots of stories about people being quite innovative around all of that sort of stuff. However, what the bank's going to look at is, as a generic industry model, how risky is that sort of stuff. So I get that. And they'll also, and as you said, they'll also look at their pre-crisis, how were they traveling before COVID hit, as part of that process as well.
I think my message to clients is, look, be prepared for cash cost to go up. I know interest rates are down, but I think there will be an element of rate for risk in how the banks assess and where they reflect their the risk profiling. They'll increase the cost of cash to give themselves a buffer, and that may not reflect in the big four, but that could actually reflect in the second tier and the non-bank lenders, where they're trying to do what they can to give the clients cash, but they need to, I suppose, give themselves a bit of a buffer on the risk side of things, if the business is considered risky. Absolutely.
So the next slide, where are we going now?
Alternatives. So what's available to business, and how do they approach it? My suggestion in my discussions with my accountant contacts, all of my clients, is make sure you've got a good navigator. An advocate, like I said before, an advocate who speaks the language of lending. They'll be a business's greatest asset in these times, because they can help break down those walls. They can present the client with options, and like I said, there's a myriad of non-bank funding options out there. There's a lot of the fintech space did take a bit of a hit during this period, but there's still a few out there that are still reasonably robust, where they've got a decent balance sheet and still able to provide solutions for clients on the whole. There's also, I'm finding a number of small and medium-sized private funding pools out there, where private investors and private funders are looking to support small business and medium-sized business for the right business, obviously. But it's not dead in the water. If you declined, there's other ways to look at things. My suggestion is always get on the phone to your advocate, your broker. Try and work out a way to get access to some of this non-bank funding if you have been declined.
Cool. So I'm gonna take this off the screen. So if you can just hit escape so that you can see your screen too, so you're not staring blankly into space. So really important points here are: one, find someone who can speak banker for you. Okay, that was with a B, everybody. Make sure that you find someone who can speak banker, somebody who is good at helping interpret where you've been, how you look financially, and can present that in the best possible light to the different finance industries, because then they may have different solutions that you may not have even thought of. You could vendor financing and that sort of stuff. You could look at a whole range of different things. You could look at a charge over the inventory that you bought and that sort of stuff. There's a million different ways to look at this situation. You don't just have to go, hey, I need a floating line of credit, or I need an overdraft, or I need a fixed loan. There's lots of other solutions out there in relation to that. So I want you to be thinking about that. Try and divorce the next 6 month time period to how you're coming out of how you're recovering from that, so that you can look at that financially from two different perspectives. I think that was a really important point that you said. There's different structures around different loans, and that loan that is built around survival of that next 6 months would be very different from the one coming out of it. So have a chat with Morgan, have a chat with other people like Morgan. If you've got questions, somebody has been asking questions and I haven't had the comments on, and haven't got that. Hey, business is still happening for sure. Absolutely. Now's the perfect opportunity to look for financing costs of hiring with access to quality hires in the market. Absolutely. Talking about expanding their teams. And are banks geared to deal with small business borrowers? And if not, who could we talk to provide services to us? And I think that's exactly what we're talking about here. If you're talking to a business finance broker, so not a mortgage broker, but a business finance broker, they will be able to talk to you about different solutions that are in the marketplace. Okay,
and that's what we do. When it comes to the, I suppose, specialisation and talking the language of the lender. For small business, particularly your SME and micro business, they may see or may never see their business banker. So that business banker that's tied to them may not even know what they do. So it's just one of those. You need someone who's going to work for you, sitting on your side, who understands what your business is and how it functions, and where the pinch points are every day, every week, every month. Yeah, and they're sitting with you.
Yeah, and who understands the different things that are available that you may not have thought of, that the bank may not even thought of, because Morgan's worked that side of the fence as well. So, hey, it's a really important point that don't think of all debt as bad, okay? Absolutely, debt can be life-saving, and it can be there, and it is a very good way to give you access to more resources so that you can grow faster when conditions are right. But you need to look at what you're trying to finance and make sure that you finance that appropriately. Would that be the right message?
I think so. That's correct. It ties back into that communication piece again, Kevin. I think you've got to take stock, look and assess what you've got, but talk. And I think use your people around you. We all don't have the right answer, or we can't answer every question. And I've got a number of clients of mine who ask me the tough questions and rely on me to give them the tough answers because they don't have the answers themselves. It's having someone who you trust enough to be able to do that.
And that's one thing I want to encourage people right throughout this time period is talk to experts in the field, right? Listen to the experts in the field. I am about to petition Parliament on behalf of small business owners because I believe that the Queensland government have accidentally put a bias to not providing any support to small business, which is 45% of the employment of our state, right? In the different funding arrangements that they've got that are worth $4 billion, they've been targeted at medium and larger sized businesses because they're all built around payroll and payroll tax, interest-free loans, but based on your payroll and that sort of stuff, as opposed to, and offer it on a first come, best dressed basis, which is an accidental bias against small business who can't afford to go to their accountant right now to get the professional advice to put their stuff together to access the government loans, and they closed down more applications for that right now. So they did so in a very quick period of time. So that's why we're petitioning Parliament, or that's why I'm petitioning Parliament on behalf of all the members here, so that you can get access to professional advice that is going to help you survive this time period and come out of it in the best possible shape, which will be putting money into small businesses immediately, but also helping you be in a much better position further on. So there'll be more coming out about that in the next couple of days. I do promise. I'm not sure exactly the timing on that. Morgan, thanks very much for taking the time to have a chat with us today. I'm going to encourage you to be a little bit more active in the group and help people out. Ask, does anyone have any questions, and be helpful. Just respond to people as they do have questions.
Yep.
And that's the best way that Morgan can possibly support you, and I'll be helping him through that process. Absolutely. Thanks very much for your time today.
Thank you very much, Kevin, for inviting me on. And like I said, by all means, my details are on the small business directory. By all means, if any members want to reach out and just have a chat about any problems they've got, I can potentially give them some guidance. Happy to have a chat at any stage.
That'd be great. So thanks very much for your generosity today. I really do appreciate it. Thanks, Morgan.
No problem. Thanks, Kevin.